All right, good morning, everybody. It's Doc with here at ReadySetTrade. Today is Friday, the 21st of April. This is monthly April expiration. All right, let's get going here. See what's going on. So we walked our way through the gauntlet of Fed speak yesterday and successfully made it through there. This morning, the only thing that we really have of note is PMI composite flash. Not really that big of a deal, I don't believe. We will see. Fed blackout starts tomorrow. Yay. So next week, no Fed speak. Earnings really peak out for the quarter. This is first quarter earnings we're looking at, and those peak out next week. So this morning we had, let's see, FCX and Schlumberger. Let's take a look at those. So we're going to look at Freeport-McMoRan, and slightly down this morning, and then Schlumberger is about flat, if they did report at all. Now, let's look at Tesla. Tesla is probably the one that we saw the most from over the last couple of days. They got hit pretty hard the other day. From about 180 down to 164 now. So they made a pretty good recovery overnight or into the close yesterday. So we'll keep our eye on them. For now, futures are slightly higher right now into monthly expiration. Next week is really when we have earnings kicking off, especially Tuesday. Fed funds futures, we are zeroing in on a 25 basis point rate hike coming up in about a week and a half now. Coming up pretty quickly. And then if we go out another 6 weeks beyond that, we don't see a whole lot moving. So it's going to be really important when we have our next Fed meeting on the 3rd of May. The language that goes around that in terms of them saying, hey, maybe it's time to pause. So now they will never say that. They will never say, hey, we're done. The only time I've ever seen them do that is when, like at the end of 2007, right before the bear kicked in, the great financial crisis, Bernanke came out and said, hey, we're thinking about not raising rates anymore. And that was a desperation move. That was after we already started to move to the downside, when we saw the economy slowing down. So if we do see something like that, that's probably not good. So we want them to be a little bit coy about this. By the end of the year, we're perhaps peaked out in terms of rates and maybe coming back down again. All right, this week we'll be here Monday through Friday, as will we next week as well, too. Now, I'm thinking about doing an additional 45 DTE ladder iron. I think I'm going to wait until Monday on that. I'm going to wait till Monday on that one, just because we have not gotten any kind of movement lately, and we're so low on the volatility scale. So I'd love to see some kind of movement on Monday that will allow us to get maybe a better entry on that. So no rush. The idea is that we put a couple of these on per week. We used to do these Tuesday, Thursday, and maybe we can get back into that mode again. Okay, so let's bring the charts down. Let's get started for today. Now, we took a day off from 0 DTE because it was just so brutal lately. But actually, yesterday would have worked out, of course. That is the way it goes, isn't it? So here is yesterday's opening range, and it wasn't very big at all. We went from 45 up to 56, so 11 points of opening range. And the price stayed fairly stable through yesterday's price action. Fairly stable through things, did start to rise up, got above the upper expected move, went after a gap up there, and then ate it into the late afternoon. But then I think what's important is we have, and this is what's been saving the market every single time. Hey, Juan, good morning. A late day close. In this case, in the last 30 minutes, we saw a late day close. Okay, so this morning the futures are getting a little bit frisky. Up, and let's see if I can find any reasoning why. Take a look here. pretty quiet right now. Really, really quiet in terms of news. Okay, I don't see anything that's really pushing these things around. So let's jump out to the charts. We have about a little less than 4 minutes to go before the opening bell. Now, in terms of the daily chart, what we're seeing is this just incredible volatility contraction, not only of implied, but also of realized. Implied and realized volatility contraction. And you can see the implied is starting to kick up just a little bit. Now, earlier this week, we're at an IV percentile of 0, which means over the last 252 trading days, there were no days with implied volatility as low as what we saw. I believe that was yesterday or the day before, like midweek. 0. Right now it's 5. So on a scale of 0 to 100, we have a value, implied volatility value of 5 on the S&P, which is still really low. Still really, really low. And you can see the realized volatility has fallen off the cliff. This is the orange line here. The blue line is what we care about. So actually, this is still working out to our favor, but I am spooked by this amount of volatility. Now, if we look at the main fractal charts, and that includes going out to the 78-minute chart, we see across the board we have non-linear price action. We see choppy, non-linear price action. This is a really odd way to come out of a bear. Usually when we come out of a bear, we scream higher, and nobody's on board. Now, I still believe that not a whole lot of people are on board long because everybody is banging the drum for the next round of the bear because they didn't make it down here, right? So they're like, well, I just want one more shot. And it may not cooperate with them. So across the board, we have energy everywhere. This thing is wound up, ready to go. Which way is it going to go? Don't know, but let me throw out a couple of ideas. We got 90 seconds to go. Again, I think the important level here is about 4,200. You can see the former highs up here in January, or actually early February. And the price has recoiled every time it's gotten anywhere near to that point. So a lot of times if you can't break out, if you try to break out, if you can't break out, what happens is some piece of news will act as a catalyst and will drive prices down. You can see all these gaps that we have, all the gray boxes represent gaps that we have in the price where the futures traded outside of the normal cash market and created gaps. So this can create a problem. So, and the only problem is because everybody can see those gaps and they become a target. So if we were to drop again, you would see the negativity off the cliff right now, just absolutely skyrocket. And that's the type of market move that can create this type of move. So this may be in works right now. This may be in the works. We'll have to see. Okay, so here comes our opening bell. We're going to look at today's expected move, and right now we're going to be starting at about 20, just over 20, 20.25. 20.25 is going to be our starting point. Pretty close to what we saw yesterday, which is 20.5. All right, let's go get our opening print. We have a little bit of a gap to the upside. That's not going to live for very long, though. Yes, gap. And I may consider putting on a fly this morning just to see if we can do something with that. Okay, so our opening print for today, 41.55 and a half. And that means our upper expected move is 4175.75. And our lower expected move is 4135.25. So let's go get those set. Upper expected move changing to 75.75, 4175.75. And the lower expected move changing to 4135.25. And there we go. It's pretty tiny. Pretty tiny. Now, briefly, before we change things around, actually, I just did change the expected move, but you can see yesterday was fairly flat. It took forever to go anywhere. So, actually not a bad 0 DTE day. Let's go change our anchored VWAP to anchor it off of this morning at 9:30. And there we go. There's everything that we need for today. There's everything we need. Okay, so I'm going to see if I can put on a 20 wide fly. Let's set this up around 35. Let's see what's happening with internals today. Internals are starting out modestly strong, but no big deal. So we're going to analyze selling an iron condor centered around 41.35. FCX is moving. We're going to make this 20 points wide. 41.55 and then 41.35 down to 41.15. That gives us about a $13 credit. And there is today's iron fly. We'll make this nice and wide. Okay, I'm gonna go ahead and put this on and see how it behaves today. Good morning, Calvin. All right, let's see if we can get a midpoint fill. Give it a few seconds here. Let's move it down to 1325. Getting some pretty good time decay happening right out of the gate. So 1325 is my opening print here. Now, this is definitely more aggressive just because we don't know if this is a trend day or not. But I'm willing to experiment with this. So I'm going to move this to a group. We move that to the 0 DTE Condor group. Let's see, we got filled at 1325, so I want to get out at 1275 from this trade. So I'm just going to mark these down and buy this back for 1275 if I can. And let's say our entry price was 41.31. So that means my stops will be 41.11. And 41.51. There are my stops. Okay, let's go see what price is doing here. Price is not doing much of anything at all. Not much of anything at all. This thing is, the market's just frozen right now. Market has just frozen up. Okay, let's look at and see what's moving here. Heat map is not showing really anything at all. S&P has gone slightly negative. The NASDAQ is pulling it down today. Let's see what our sectors are showing. Sector spiders, the VIX is up slightly. We have staples leading markets higher today. Utilities, healthcare, discretionary, surprisingly. Okay, tech is down. We have financials down, energy down, materials down. Communications is fairly flat right now. Let's see what's happening in XLY. That would probably be Tesla, and Tesla is still down. Let's see if it's Amazon is pulling things up. Yes, it is. Amazon is gapping higher today. Let's see. Amazon is up. Silver is up. SLV up slightly, consolidating after another very, very strong move higher. There's GLD consolidating as well too. Let's see, what do I see moving here? Yeah, mostly it's Amazon is what I'm seeing here. Let's look at Market Watch. Let's see what's happening in the Dow. Market Watch on the Dow, we have Procter & Gamble. So that's the staples are working today. Home Depot. Apple slightly down. Most of tech is down. Most of financials are down as well too. Caterpillar, American Express, those are slightly down. Pretty mixed market so far. Let's see what the NASDAQ is doing. NASDAQ 100 is slightly down, pretty mixed. We can see Airbnb is getting taken to the woodshed. Amazon is up. We have CSX up. AutoZone. Let's see what's down here. Marvell, JD. AMD is down today, 1.5%. Very, very choppy mixed market today. S&P has gone back to flat. Let's see if we have any time decay. We have a little bit of time decay. No, not really much. Very little time decay happening. The price is staying in one spot, but we're not seeing. This is so odd that we're seeing almost negative time decay coming right after the open. Price not going anywhere. Okay, let's see. Want to look at some of the other trades that we have. Well, that's interesting. The analyzer is not working. It's not moving over off of the simulations. Huh. That's wild. Looks like we're getting a little bit of a bid here in the futures, a little bit of a bid, but we're just right now trading right around the VWAP. Right now we have a 6-point opening range on the S&Ps. 6-point opening range. We have market internals are starting to revert back down into range bound. We started off modestly strong. We have reverted back to zero. In the tick, we have a day where nothing is going on right now. Nothing is happening. So, anybody have any questions? Anything, any topics you guys want me to go over for today while we are here together on a Friday? No rocket launches today. That was pretty cool yesterday. I enjoyed that. You can tell where people's mindset is because of how much they know about the program, because people that don't know much about the program say, oh, it blew up right after launch. And those that understand what's going on are like, wow, did you see that thing clear the... it got above the dust. That was, I think it blew up the launch pad. Literally destroyed the launch pad on launch. So whatever concrete that they're using is not cutting it, because I think they melted that concrete on the launch. 39 Raptor engines. I don't think they had all of them firing. Don't think they had all of them firing. Okay. So let's look at some other things that we could do here. Now, we can look, one trade that we have not really talked about for a while here because we really haven't had a chance to use it, would be the broken wing butterfly. So if we do get a retest of the lower expected move, with the current trend that we have, we would expect to see reversion back to the mean. Or if we see the price trying to break out above the upper expected move, and if it fails at that point, then we can also take another mean reversion. We're getting such little range in today's trading that if we do see the price making an attempt to do a little bit of a jailbreak, DFW Cosmo, because of the launch. Cool. Nice. That's cool. Did you see it? Did you actually see the, I guess it really didn't get up that far, probably. You didn't really get a chance to see it. I mean, I don't know what kind of altitude it got. Maybe a couple of miles before it blew it up. I was flying from Miami to Atlanta, and this is, this must have been 30 years ago. And I saw a very stratified, vapor trail that went straight up as we went past Orlando. So we had just missed a space shuttle launch. That was pretty neat. I like that stuff. My son, my older son, dated a girl in college whose dad was one of the STS pilots. One of the space shuttle pilots. Ken something. And it was fun to talk to him. Oh, you were later. All right, so you missed it. Yeah, just nothing going on. These things are just taking forever to decay. Taking way too long to decay. This is very unusual. I mean, we've been playing these for about 3 years now. And most of the time, especially early entries, have a decided edge to them. And all the ones that we would set up in the room and then wait until after 10 o'clock, those would all easily pull $50 within the first 15 minutes. Easily. And right now we are struggling to get any kind of decay, although it seems to be loosening up just a little bit here. seems to be loosening up. We have our limit in place. We'll see if we can make this happen. I am even thinking of getting back into futures again, futures trading, and my thought is to see if I can find something in the hour between 10 and 11 o'clock. That's about as far as I want to. I don't want to go back in the old days of being, staring bleary-eyed at the charts all day long for 6 hours. And a lot of that was because I would get in a hole. I'd get too aggressive right out the gate, like, oh, there's one, let me jump on this. And then get in a hole, and then you're working yourself out of a hole the rest of the day, which usually doesn't work all that well. But if I can find a very simple setup, and a lot of this is going to involve looking to be long above the VWAP and looking for signals above the VWAP, volume weighted average price, or looking to be short below the VWAP. And some of the better signals that I see are ones where we establish a decent size opening range, and then we see a break which comes down, separates itself from the VWAP, right? And then comes down and bounces off of the opening range, or we could see the opposite thing happen, failing on a retest of the opening range. Yeah, the NQ was what I used to trade. The NQ was what I traded, and that a lot of that was because of the contract size. The contract size on the ES was just too big at $50 a point. And it was too chunky, right? So a quarter point increments of like a quarter point separated you from being able to get out. I mean, it was just too chunky. But the MES at $5 a point, now we're talking. You can get multiple contracts in that. You can peel some off, and it's just a more laid back trading experience. So I'd consider the MES or the MNQ, either of those two. I mean, if we're going to have so little volatility, but the realized volatility, see that here's the deal with the realized volatility. If we look at this dude, the ATR is still mammoth, still 42 points a day. Remember that during the great financial crisis, we peaked out at 63 points a day back in 2008. And during, we peaked out here during last year's bear market at about 92 points a day. And then we got as high as like 150 points over here during the pandemic. 150 points a day. So I was trading quite a bit of this with futures, and then it got to be difficult. Right, I was just kind of playing the long side, and it was really, really easy, and then it got to be a little bit tougher. So I've got to come up with something that's really easy for me to do without getting involved and wasting time. Do not want to do that. Okay, we're starting to get a little bit of decay coming in here. This is good. Lots of volume in micros. Know someone who trades 7 MNQ accounts through an Apex trade copier on funding account. Wow. Cool. Yeah, Craig Hill, who used to run the futures room in here on the second hour. I'm pretty sure that's what he mostly trades, is the micros. He seems to like him. So I got to reach out to him and see what he's doing these days. Oh, there we go. We got some movement now. We are getting some movement. Breaking loose, shaking loose from this thing. Okay, market internals coming down. We have Cisco on an RSI2. Interesting. Let's see if there's an RSI2 that we can play. Wow. That is quite that's a very rapid puke on Cisco. Right to the 200-day moving average. Paid their dividend and everybody's getting rid of it. Actually, not paid the dividend. That's the ex-dividend date. So that is definitely, and if we look at this on this will probably also show a longbow signal if we go to Cisco. Yeah, this is outside of the lower Bollinger Band. So we did have a squeeze here. It dropped outside the lower Bollinger Band. So you'd look for a mean reversion, but the price has got to stay above this 200-day moving average. So typically how we play the long bows is we're going to wait for the RSI to hook up. So you might need to see it jump up here, although this is a little bit of a dicey signal. This was the best one here as it got below. The first signal is always the best. Here's the second signal. No third signal. And this may be a trend change to a monthly or a weekly pullback, something like that. Yeah, we're doing fine on this thing. It's going to take a while to close this. This is probably going to be something in the next half hour or something like that. We're such slow time decay. Starting out with 20 points and or just, I mean, if you traded this with 50-point wide wings, which is what some people do, they trade 50 points wide no matter what, you're going to end up with an iron fly that looks like this. Here's the zero line. Here's all the risk down here. Here's the risk. Not a good idea, right? So you're just dealing with this. It's almost like an iceberg. No, thank you. No, thank you. Yeah, this is so slow. This is so slow. There's no way I can publish trades out on this stuff right now. So we've got a 10-point opening range. We started out with 20 points, plus or minus 20 points of expected move. We have market internals bouncing back up again, have gone positive. And we are seeing, let's go back to the sector spiders. I mean, it would be so odd to go from a full-on bear market to all of a sudden we just chop sideways and do nothing. This is so odd because every time that we've gone through a bear, although I do say every one of them is different. Now, this was not a bear, even though it was, people call it a bear market. The pandemic was not a bear. That was just a very, very deep correction. This truly was a bear market. It did act like one. Everything about it was a bear market. Now, I would also say that this was a bear market. This period in here was a bear market where we just got nowhere. It was a horizontal bear market, not really a vertical bear market. And even coming out of here was very difficult you remember these times back here in 2016 where the price just didn't move, coming up on the election, and it just did not move. It was like, would you poke it? And it was frustrating because it's like we did not want to put condors on because it was so dangerous with so much energy. And then boom, it's gone. So this to me is what is almost what we're looking for. We're looking for one of these events where it's a shock to the market. It happens overnight, happens for a couple of days, and people panic and go, oh, sell everything. The worst is here, just kind of like the bank crisis that we just went through. And then what always happens to this is that everybody abandons the market and the market just takes off on its own. This is kind of what I'm thinking that we may end up doing here. That we may get a quick little drubbing down here, and then it slingshots back up to the upside. We have the Dow positive, we have the Russell negative for today. Very, very quiet markets. The opening range is expanding just a little bit. We have now a 14-point opening range, which is interesting. We're starting to trend underneath the VWAP. So watch that carefully. Trending underneath the VWAP. So we have NASDAQ is down. NASDAQ is not really contributing, although it's not that much right now. Not that much, 0.3%, please. Please. All right, so this thing is still just about break even. Very little time decay, just brutal, right? So what I'm wondering is if we're running at such low volatility, can we just do straight long option setups? I mean, we could do that. If we can identify some straight long option setups, buying puts or buying calls, and they're going to be relatively cheap, right? If we do something like that, if we go out to the spiders, because not everybody wants to do futures. But if we just did at the money puts and calls, these are going to be, these will set the risk. Puts right now are about $80, calls are $60. That's it. The worst that's going to happen is you wave goodbye at them. But the gamma on them is just stupid. Stupid amount of gamma on these things. So they move very, very quickly. And you could kind of see how much it would take to double these. So if we bought these puts at 86 or 87 or something like that, you could see that if we got approximately a 20-point move, no, a 10-point move. If we got a 10-point move, these would almost, not quite, but almost double. They'd go up in value 50%. Just a 10-point move on the S&Ps, which is a 1-point move on the spiders. And we can also see that if we bought these at 62, if we had a 10-point move, these would just about double. So that's the blessing and the curse of these zero DTE options. If you can get a good directional move, you can get some joy. You can get some joy. All right. So let's take a final look here. Looks like we're starting to trend below the VWAP for today. The internals don't look all that bad, really. So it's just the market just kind of wandering around, back and forth, up and down kind of thing. There's the opening range. So we may have an opening here if we test off of this lower expected move and then start working higher again. This will be a setup for a broken wing butterfly. Let's see what one of those would look like. If we add that, again, we're going to do about a 35 delta. And in this case, watch out if you've already got a position on. But if we're going to buy a butterfly, let's buy a butterfly, and then we'll take the furthest out of the money put option and go slightly further. And then that gives us a credit, which in this case is about $1. there we go. Credit for about $1. It gives us some room to be wrong, and it gives us an income trade. And it manages risk on this pretty well. So there we go. That is our setup if we get the price to come down and test off of there. All right. Guys, that's all I got for today. That's all I got for today. So it's going to be another choppy day. What a surprise. Right? What a surprise. Very low volume choppy day in the S&Ps. And looking at the daily chart again, here is the expected move for the entire week, and we're nowhere close to either upper or lower expected move. Nothing close. And yet we still have lots of gaps around here. There's lots of gaps that can be a target in the short term. So I keep thinking that we may be heading lower on some kind of disappointment. And who would create that disappointment? Could be the Fed in a week. Are we going to wait for a whole week for the Fed to disappoint us, though? I don't know. All right, folks, you guys have a great weekend. Happy Friday, TGIF. I'll be around today if you need me. Otherwise, you guys take care, and I'll see you on Monday. All right? Everybody be good. See ya.